Q&A time for beginner Forex traders. Let's get into the questions. Do I put my stop loss break even as soon as the trade is in positive? Hell no. Hell no. That's a good question. That's a good, I would say beginner question. No, why would you do that? If you're confident that price is going to trade towards the money, you've identified money, you're seeing market structure, everything's going in your favor, why would you want to move your stop loss into profit? Like instantly. I'm coming out with a Beginner Forex Mastery course. And in that course, I show you guys when exactly I move my stop loss. It's going to be completely different to how you guys have been trained with these retail concepts. So I trade completely different. I don't just move my stop loss just like that. I don't move it into a break even the moment it goes into profit, because the price could easily come back and tap your entry and then continue to go. And so there's specific things I look for when I'm looking at moving my stop loss. Do I trade on Sunday? Monday is false move Monday. Yeah, I always tell people that. On Monday, you normally get the false move. Sunday is blow the heck out of your account. You're blowing your account instantly. I remember I traded on Sunday a few times back in the day, and by the time I woke up, just blown out, finished. Account gone. As a day trader, what time frame do I start on? I always start for the high time frame, daily time frame. How often do I monitor the chart? If I trade 5 days a week, I'm looking at charts 5 days a week, but it's not throughout the whole day. That's a waste of time. If you find yourself trading for the whole day, you're probably wasting your time. When I'm living in the UK, I like to jump on in the London session, do my thing, and probably hold for the rest of the day or for the rest of the week if it's a swing trade. But I'm not always looking at the charts. I do set alerts as well, so I know when price is passing certain points. Apart from that, I'm not looking at the charts every single day. When I used to do that, at the end of the day, I would feel so rubbish. I would feel like I wasted my day. What time do you trade every day? In a London session, I wake up at 7 o'clock, for example, or just before 7, or sometimes it'd be 8:30. I'm not gonna lie, sometimes I'm sleeping in. But the London session basically is when I like to trade. Do you trade ping pong? Bro, what is that? What on earth do I trade ping pong? Listen, I don't know what you're saying right now. The only ping pong I know is like that table tennis stuff, and I'm not even good at that sport. So there's no ping pong in that here. Please explain the offloading that you were talking about when it gets to previous highs or lows, more precisely the counterparty thing, and why not to hold a full position. What a brilliant question. When I first started trading, had no idea. Had no idea about all this stuff. I would be taking TP at support and resistance levels, and maybe a Fibonacci level and all these different things. And sometimes it would work, sometimes it wouldn't work. And then when I started trading towards the money, everything changed. And the reason being is because you have to think about it. For every single buyer, there must be a seller. For every single seller, there must be a buyer. So if you're buying from a discounted price, when prices dipped into a high-low area, it's got into a reversal area, and now you're looking for reversal signs. If you're buying from a discount, you have to think about, so where do large funds, where do smart money want to offload their positions? Because when you close your buy order, you're actually selling your order back. So that means in order to sell your order back, there must be other people on the other side who was buying your order or buying at that point. So you have to trade towards the money, because normally there's going to be people protecting their money, doing opposite trades. There's going to be stop losses up there. There's going to be breakout buyers above that high. Oh, if price breaks above this level, we're all in. It's a strong break. So that means there are willing participants who are ready to buy when price breaks out of a level. So that's why you then, with your discounted buy, you take it to them, you close your buy. In other words, you sell your order back, and those people who are willing to continue buying, they buy that order. So in other words, there's an exchange of contracts happening. Where do smart money want to offload their positions? They want to offload their positions where there are willing participants who want to continue that buy. That's why you hold towards the money. If the money's up here, you hold there. You can be taking little, if there's little highs and stuff, along the way, that's tied up to yourself, but you hold to that position. As soon as I have 100 points, some tell me to close that trade, but then sometimes it goes to the moon. So it depends on the type of trader you are. And there is no, this is the be all and end all. You close when you're happy. Does the high or low stop at the wick or at the end of the candle? It's the wick. Cool. This is a quite lengthy one, but basically he's just basically saying, I'm going to sum it up. He's just basically saying that how on earth do you buy a currency pair if you don't own the currency pair? If you experienced this in the very beginning when you first started trading, and you was like, what do you mean buy this currency pair? I don't own that currency. Because when I first started trading, I was like, okay, cool. So I'm meant to be buying USD JPY. I don't have no dollars though. I don't even have JPY to sell. Like, what are you talking about? But you have to remember, you're not buying and selling the actual currency pair. You're buying and selling the decrease or the increase of the value of the currency pair. That's another thing that I've broken down in my course as well. So just regarding the course, and I have a link in my bio for you to drop your emails in there if you want to be part of that course. The course right now is obviously in beta, and so we're still developing that course at the moment. If you decide to opt in right now, you can get discounts with that course as well. So if you purchase the course, it's going to be a group for you guys within my Discord where you can actually just chop it up and talk. What leverage do you use? So when it comes to leverage, I use a 1 to 500 leverage. I've used 1 to 100 leverage before as well. But when it comes to leverage, really and truly, the question is, how disciplined are you? Because if you're disciplined and you're trading a 1 to 500 leverage, nothing should happen. You're risking 1% per trade. You might be placing 3 trades a day. And if those 3 trades flop you, you're done. If you're not disciplined, if there's a sense of greed and you always want to be trying to get more, or you're always trying to just get your money back in revenge trade, don't even be looking at no 1 to 500. You better be looking at a 1 to 100 leverage because you're greedy. You need to be trading like a 1 to 100 or less, because basically a 1 to 100 leverage won't enable you to place more trades. So just for an example, let's say 1 to 100 might allow you to place 10 trades, whereas a 1 to 500 might allow you to place 50 trades. But like I said, if you're greedy or you revenge trade, you better be sticking to below 100, because if not, you're going to blow your account real soon. If you're very disciplined, you can still stick to a 1 to 100, but if you're very disciplined, then whether it's a 1 to 100 or 1 to 500, it doesn't really matter, because you're disciplined, you're sticking to the plan. Took me ages to figure out what you've taught in the past 2 videos. Big up yourself, finding it hard to match my work life and trading at the moment though. Do you trade specifically in kill zone times, or do you just set and forget? So I trade in the London session when I wake up. And also you mentioned work-life balance and trading. It's going to be very tough. You're going to have to put in some hours, or put in the hours that you have learning the process. You trading a live account is a distraction. If you don't know what you're doing, if you don't have a sound strategy, if you don't know how to read the markets in a specific way, you're just wasting your money. You're losing money. You're losing. And so why would you fund a live account with a losing strategy? It don't make sense. That's what I did in the very beginning. It never made sense. I was so gassed and so happy about trading live and making money that I went straight live within 2 weeks. It was good in the beginning, then it wasn't good. And then it became very bad because I was blowing non-stop accounts. You can avoid all of that by just sticking to learning how the markets move and learning. Once you're confident in your trading, you're making profit, eventually there's going to be something that builds up inside you that says, no, you don't have to be at this workplace, you're just looking around like this, like, I don't need to be here, I've already made 3 times my wage this morning. I'm doing that consistently, and then start thinking about what are my next steps. I'm not saying quit your job now. Hell no. There needs to be a process. You might need to have another stream of income coming in, just in case it goes all crazy. Would you make a video on imbalances in the markets? I've touched on it briefly. I've gone in depth on it in my course. I've touched on it briefly in the videos. I'll probably touch on it again. Do you look for fundamental news? No. I used to trade news. When I say trade news, I mean like I'll do 10 pips above current price, 10 pips beneath, or 20 pips above, 20 pips beneath, and whichever way it broke out, never worked. It's not reliable. The only thing I'm aware of is FOMC, because they be manipulating like crazy, and then NFP sometimes. When it comes to taxes, what you should do is set up a company and pay yourself for that company, pay your taxes. If you're just dabbling, just a little bit here and there, it's not really a source of income. Do I watch the DXY? Yes. Every day I jump on, I'm always checking out the DXY. Will these concepts apply to crypto trading too? Yes. Myself and the mentees was watching Bitcoin, and we was looking at it from an institutional smart money perspective, and it played out exactly how we wanted it to. It dropped exactly to our area right now. Is there liquidity above and beneath an up or down close candle? Yes. But you don't need to worry about it, because if the institutions are happy at that point, price should just drop from that area. The high should be protected at that point. How many currency pairs do you recommend watching for an intermediate level trader? Listen, I used to do all of them back in the day. I used to try to look at every single pair, and I thought I was the don trying to catch every single trade on every single pair. I just stick to a minimal amount of pairs, and the reason I do that is because I want to try and catch all the moves, or as many moves as possible on those pairs. If I'm looking at all 30 different trades, then I'm going to be missing opportunities here, missing opportunities there, jumping in late here because I'm looking at another pair. And so, yeah, there's none of that. So what I do, I focus on just maybe 1 to 3 pairs, and then I just interchange within those 3 pairs. I might want to forget Euro USD, add in oil, forget oil, look at US 30. But my bay, you guys know my bay. If you're an OG, you know my currency bay. G is a currency pair that I focus on every single day I'm trading. But I used to be afraid to trade GU back in there, actually. I used to be afraid to trade GU. It used to stop me out all the time. I used to think it moves so sporadically, you know, just all over the place. But yeah, GU's better now. I love it. I look at 1 minute time frames for entries only, and that's it. No, I don't get no bias from the 1 minute time frame. My bias comes from the daily and above. How do you identify areas where there is high liquidity? When you say high liquidity, what you probably mean is a pool of liquidity. Just to say there's consolidation. Above that consolidation, there's going to be a pool of stop losses up there, a pool of buy stops up there. Price would jump into that level. All kinds of manipulation happening up there, and then go in its direction it wants to go. What time frame do you use for taking profit? If I'm swing trading, then I'm looking at the daily time frame. You know, if I'm intraday trading, then you're looking at the highs and lows that the lower time frames are giving you. How do you not get faked out when you see a setup? You wait for the low risk setup. That's it. You wait for the low risk. Instead of going for the high risk setup, wait for the low risk setup. How do you backtest SMC? Okay, let me give you an example of how I backtest. When it comes to backtesting, I don't backtest like a lot of other people out there. I backtest to see it happen. I backtest to see these concepts working out. I don't backtest and start placing entries and did it go up and press the replay button? No, because you don't know what would have been happening at that time. You could have had an argument with your wife. You could have just saved someone's life from about to being hit on a road or something like that. And then you don't know what's happening before you're placing that trade emotionally. And so you don't know whether you would have placed that trade or not. Okay, let me correct myself. That's one way people backtest. I don't backtest like that. Would you have taken that trade? Would you have done it? You don't know. What I do when it comes to backtesting, I backtest to see it taking place. I want to see that last down close candle hold up. Okay, cool. So it held up then, and then when it came back, when it held up, it played around there. So that must have been mitigation, and then it took off to then broke another structural high. Okay, but before it took off, there was another last down. So that must be the second one I'm meant to look out for. If they're now respecting down close candles, I need to stay bullish. They're respecting down close candles and violating highs. I need to be bullish. So let me see it again. So when they return back here, okay, it took them longer to get back here this time, but they still did it. So the video started acting up, so I decided to end it there. But before you guys go, I wanted to let you guys know about the Beginner Forex Mastery course that I'll be launching on the 31st of March 2022. One of the biggest issues I found with Forex traders is that their start out in the Forex isn't right. So what ends up happening is that they're constantly making mistakes and constantly losing money. This course is designed to get your foundations right, to get your start out in Forex done correctly. So if you would like to register your interest, you can do so by joining the mailing list. If you want to capitalize on the early bird pricing and get 50% off the course, then you can do so by clicking on the course and then following through with the steps to get yourself enrolled. If you have any questions regarding this course, you can either reach out to me on Instagram or via email. Have a blessed one, family. Peace.